day everyone. Today our new topic is stock valuation. Now if you have a look at the notes that I've sent to you on PDF, stock valuation is basically broken down into three types of stock valuations. You've got SIM, which is your first one, and that is the specific identification method. That's our first one that we're going to learn. Then we've got FIFO. FIFO is first in, first out. And then lastly, we've got our weighted average method. Now, we've learned in grade 10 that there are two types of systems when it comes to inventories. You've got your perpetual and you've got your periodic systems. Your perpetual was your continuous, and that's generally used for businesses that sell expensive items but very small amounts of it. So it's generally your car sales or your diamond sales or whatever have you. With your periodic system, here, remember, you calculate cost of sales only at the end of the financial year. It's generally used for businesses that have inexpensive products and they sell large quantities at a time. Okay, these are the two that you've learned in grade 10. Now, this year, we're going to learn how to count or to value our stock at the end of the year using either of these systems, either the periodic or the perpetual. Now, when it comes to your specific identification method, that is generally for the expensive small quantity goods. Your FIFO is just businesses that opt to use the first in, first out method. And for your weighted average, it would generally be used for businesses that have large quantity sales of smaller items, because this is obviously taking into account the average at the end of the financial year. Now, if we can just quickly have a look through our notes, we've got a few calculations which you guys have learned in the past. Your markup percentage on cost, we all know markup is gross profit on cost of sales times 100 over 1. To get to gross profit, you take sales minus cost of sales. Now remember, when it comes to cost of sales and you are in the periodic system, your cost of sales needs to be calculated at the end of the year. And to get to your cost of sales, you've learned this in grade 11. It's your opening stock plus your purchases minus your returns, your donations, your drawings, plus your carriage on, plus your custom duties, minus your closing stock gives you the cost of the goods that you have sold. These two we learned last week. It was your rate of stock turnover and your period for which stock is on hand. Those are the three formulae which you will be using if necessary when it comes to stock valuation. Then, boys and girls, you're most welcome to read through the rest of the notes. It's basically just the GAP principles, the internal control measures when it comes to the stock in our business. Now let's have a look at the specific identification method, which is what we will be doing in this video. It clearly says the specific identification method generally is known as the cost price per unit method, and it says here that it's used for businesses which have physically low flow of stock. So like we said, your car businesses and things like that. The advantages to having this is that the business knows exactly what type of inventory it's holding and the cost of each item at a specific point in time. It's not calculated at the end of the year, but as and when the business sells an item or buys an item. Here are the disadvantages when it comes to the specific identification method. Obviously, there's limited numbers because it's expensive goods, they're smaller quantities, and you can read through the rest of those. Let's quickly do our example. So we're now going to be working with example 1, which I have given to you in your PDF documents. You've got example 1, example 2, and the last one says example C. You're most welcome to change that to example 3. Here are the examples. Okay, so there's example 1. And example 1 is asking us to calculate the total number of units on hand at the end of the year. That is irrespective of whether it's the sum method, the FIFO method, or the weighted average method. You calculate number of units exactly the same. Here it tells us calculate the value of the closing stock using the specific identification method. They're also asking us for cost of sales using the specific identification method, and obviously the gross profit. So let's use our information to now calculate it using the specific identification method. Number 1. So, example 1. Number 1 is asking us for the number of units on hand at the end of the year. Now, obviously, the number of units on hand will be the opening balance plus anything that you bought minus anything that you've returned, obviously minus anything that you've donated or you've drawn for the business for personal use, and then obviously you're going to minus what you've sold, and that will give you the units that you have on hand. So let's read. SA Diamonds holds, amongst other items, 110 sets of diamond earrings at the beginning of the current financial year. So we obviously start with the units on hand, which is what we want to calculate at end of year. So we start with the units at the beginning of the year, which was given to us. And that was 110 units. Let's carry on reading. Of the 110 sets, 30 sets were bought 2 years ago at 1,900 per set, and 80 sets were bought in the previous year at 2,900 per set. So that was in the past. That is part of the 110 sets. During the current year, 40 sets were purchased at 4,400 Rand per set. So we bought units purchased or units bought was 40 sets. So that would obviously add to the 110. Import duties per set have been the same for the last 3 years at 100 Rand per set. And then the following information is available on the sets of earrings sold during the current financial year. Now remember, what will sold or sales do to the amount of stock that you have on hand? It will obviously decrease it. So total sold, 100 sets were sold at 6,000 Rand each. So we just need to know the units sold is 100. It will obviously decrease it, so let's put that in brackets. So if we do that on our calculator, that is 150 minus 100. We have 50 units on hand at the end of the year. So we can say this is how much is on hand at end of year. Also, in other words, it's your closing stock. Okay, so that's number 1. Let's look at number 2. Number 2 is now asking us to calculate the value of the closing stock using the specific identification method. So when it comes to the specific identification method, value of closing stock. When it comes to the specific identification method, sales are always made from the specific time that it was bought. For example, these 30 sets were bought 2 years ago. These 26 sets were sold 2 years ago. These 80 sets were bought last year. 50 sets of that were sold. We bought 40 sets this year. Of the 40 sets, we sold 24 sets. So we take it from the specific batch that we bought. So let's have a look at how we're actually going to calculate it. Let's start with the first year, or 2 years ago rather. Let's start with 2 years ago. So 2 years ago, you bought 30. So we'll just write here 2 years ago. You bought 30, okay, which is said here. 30 sets were bought 2 years ago at 1,900 Rand per set, okay. And then of the 30, we sold 26 sets. So that would obviously decrease it. So let's say minus 26, which is what we sold. So obviously from 2 years ago, we only had 4 sets remaining. Now, what was the price that we paid for these 30 sets that we bought? We bought them at 1,900 Rand per set. So that is the value that we will carry that particular stock at. However, don't forget to always add any transport costs as well as any custom duties. Now, in this particular activity, they don't give us carriage on purchases. However, they do give us import duties per set, have been the same for the last 3 years at 100 Rand per set. So 1,900 per set plus 100 Rand per set for the import duties. So each set is carried at 1,900 plus, let's not forget, the 100 Rand import duty. So it's actually 2,000 Rand per set. And obviously we have 4 sets remaining. So that gives me, let's just write 2,000 above there. So that gives me 8,000 Rand from 2 years ago. Now, let's look at what we had last year. So 1 year ago, we bought 80 sets. Of the 80 sets that we bought, we sold 50. We bought each set at 2,900, but let's not forget again, we need to remember to add the import duties at 100 Rand per set. So 1 year ago, we bought 80 sets, we sold 50. Let's just have a look at it again. We bought 80 sets in the previous year or 1 year ago. We sold 50 that we bought last year. So if we bought 80 and we sold 50, we obviously left with 30. We bought these sets at 2,900 per set, but that was excluding the import duty. So we need to add those customs, and that is 100 Rand per set. So it's 2,900 plus the 100, that was our cost of 3,000. And we have 30 units at 3,000 gives me 90,000 Rand. So far, the stock that I have left was 4 units from 2 years ago, 30 units from 1 year ago, and let's see how much I have from this year. Now this year, I bought 40 sets, and of the 40 sets, I sold 24. So let's have a look. This year, we say bought 40, sold 24. So I have still 16 left in my business. Now, I bought the 40 sets at 4,400 Rand per set, excluding the custom duties or the import duties, so plus the 100. I bought it each at 4,400 plus the 100, so that is 4,500 effectively. So 16 sets at 4,500 gives me 72,000. 72,000 Rand. Obviously, to get to your total stock valuation, you're going to add the 3. So you say 8,000 plus 90,000 plus the 72,000. You get to 170,000 value of your stock at the end of the year. If you want to know how many units it is, well, we've calculated it in the previous question, but you can also do it one more time. You can say 2 years ago we had 4 units left. Last year we had 3 units left, and this year we have 16 units left. If I add all 3, I'll get to 50 units that I had left. Okay, so for the specific identification method, I've got 50 units left, but the value is 170,000 Rand, because each set needs to be taken into account in the year in which it was bought versus the year in which it was sold. Okay, let's look at the next question that they're asking us from example 1. Number 3 says, calculate the cost of sales using the specific identification method. Now remember, when it comes to cost of sales and we're not given information like gross profit or sales and we can't use our actual formula, you remember from grade 11, to get to cost of sales, you need to use your periodic systems formula. So that is opening stock, add purchases, add carriage on purchases, then you also need to add your custom duties, you minus your closing stock, so less closing stock will then give you your cost of sales. Remember this from grade 11 when we did the periodic inventory systems. Right, so if we take into account our opening stock, remember for our opening stock we had 30 units at 1,900 Rand. We then also had 80 units at 2,900 Rand. That was our opening stock. What we shouldn't forget is obviously the 40 will be purchases for this year. It won't be relating to last year. So let's quickly do that. We say opening stock is 30 units at 1,900 plus the 80 units at 2,900, and then obviously plus your custom duties, because that is also taken into account as opening stock because it adds to the value of the stock. So we know it's 80 plus 30 is 110 units at 100 Rand. So 110 units times 100 Rand each. So that's your opening stock. If you wanted, you could have just added your 100 Rands here. So you could have said 30 times 2,000 and 80 times 3,000. It's exactly the same thing. It gives me a total of 300,000 opening stock. How did we get that? We took our last 2 years ago 30 units or 30 sets at 1,900. We then took last year's 80 sets at 2,900, and remember we need to add the custom duties. The total is 110 units and it's 100 Rand per set or per unit, and that's how we get to 300,000. During the year we purchased 40 units, or if you want to look here, during the year we purchased 40 units at 4,400 per set or per unit. So 40 times the 4,400, and that gives me an amount of 176,000. 176,000. There was no carriage on purchases. However, there was custom duties. And remember, because we're doing this year's one, we calculate the custom duties as a separate line item. The opening balances ones, those ones go as part of the opening balance. So custom duties, 40 sets at 100 Rand per set. So 40 times 100, that obviously gives me 4 10,000. And then lastly, we now need to take out the closing stock. Now, we don't need to go and calculate that again because we have the closing stock from the previous activity. So we can simply say minus 170,000 from the previous question. That's my 170,000 closing stock. And if you do this on the calculator, you have 300,000 plus 176,000 plus the 4,000 minus the 170,000 gives me cost of sales of 310,000 Rand. My cost of sales is 310,000 Rand. Okay, so that is your specific identification method. That is how you will then calculate it using the SIM method. The last question is asking us to now calculate the gross profit. Let's put that quickly into the screen. The last one is asking us to calculate the gross profit using the specific identification method. We know that's easy for us. Gross profit, put this one here, number 4. We know our gross profit is equal to sales minus cost of sales. We've already calculated our cost of sales. Okay, it's my gross profit. So, my sales, which is what we need to calculate, let's have a look. It says here, total sold was 100 sets and they were sold at 6,000 Rand each. So what we need to do is for sales, we say 100 sets at 6,000 Rand each. So 100 times 6,000, that gives me 600,000 sales minus my cost of sales, and my cost of sales I have calculated in the previous question, and that was 310,000. So I need to minus 310,000, and so my gross profit is equal to 290,000 Rand. 290,000 Rand. That is the gross profit using the specific identification method. In the next video, I will then do example 2 and example C, which is example 3. That's using the weighted average, and this one using the FIFO method.